Imagine a world in which all central banks use the same digital money, which might lead to hitherto unheard of speeds and efficiencies in international transactions. This is hardly a far-off science fiction scene. With regard to XRP, the native digital asset of the Ripple network, this might well be the case. In this article, we examine the potential and ramifications of XRP becoming the lead in global central bank transactions, a development that would cause its price to soar to $17,000 per unit. XRP, which is sometimes confused with Ripple, is the digital currency that powers the Ripple network, a technology that enables instantaneous, nearly free international financial transactions of any size. In contrast to Bitcoin, which was intended to be a decentralized digital currency, Ripple is a fintech business that collaborates with banks to enable quicker transfers between countries. The Ripple network sets itself apart by emphasizing transaction speed and efficiency. While the majority of cryptocurrencies aim to provide users with financial independence, Ripple sees itself as an ally of established banking systems, possibly opening the door for more widespread use in official economies. In the Ripple system, XRP acts as a bridge currency, making it possible to swiftly and effectively execute trades across other currencies. It is a useful tool for central banks trying to update their operations because of this feature. The use of blockchain technology by central banks has the potential to completely transform global financial governance. XRP, in particular, has several advantages over other cryptocurrencies in traditional banking systems, including high scalability, fast transaction speeds, and much cheaper costs. Blockchain technology has already been the subject of several central banks' experiments. The Central Bank of France, for example, has started testing several integrations and has publicly acknowledged the possible advantages of digital currencies. With its strong infrastructure and current connections to big banks, XRP is a strong contender for these advancements. Central banks' adoption of XRP may result in a more integrated and effective international financial system. Banks could improve international economic exchanges by lowering processing times and exchange rate friction through the use of a single digital currency. The transaction speed of XRP is one of its most attractive qualities. With settlement times of only 3 to 5 seconds and a transaction rate of up to 1,500 per second, XRP's efficiency much exceeds that of Ethereum and Bitcoin. Because of this, it is the perfect platform for the kind of large-scale international transactions that central banks often handle. Furthermore, transactions on the Ripple network frequently cost a fraction of a cent or less. For financial institutions and central banks that currently pay higher fees for overseas transfers, this might result in significant savings. Concerning sustainability, XRP is at the top as well. The network presents itself as a more ecologically friendly choice because it does not rely on the energy-intensive mining procedure that many other cryptocurrencies use. XRP has encountered many obstacles despite its potential, especially from regulatory organizations. Ripple Labs and its executives are accused by the U.S. Securities and Exchange Commission (SEC) of conducting an unregistered securities offering through XRP sales. Due to these legal disputes, market prices and investor confidence have been greatly impacted. The regulatory obstacles pertaining to XRP underscore the ambiguity surrounding its categorization as a security or currency, an essential differentiation that influences its marketing and trading strategies. Furthermore, central banks that are risk conservative may be reluctant to accept XRP because to the erratic nature of the cryptocurrency market. Widespread use of a global digital currency such as XRP may have far-reaching consequences. It might facilitate quicker transactions and less complicated currency exchange for international trade, which could increase trade volumes and spur economic growth. Particularly developing nations stand to benefit. These countries frequently experience currency instability. A stable digital currency might be more dependable and draw on more foreign capital. But there are also worries about losing financial sovereignty and being reliant on digital systems. It would take a significant growth in market capitalization well into the trillions of dollars for XRP to be valued at $17,000. Demand must greatly exceed the $100 billion XRP fixed supply in order for this to occur, which is only achievable if significant financial institutions embrace it worldwide. Financial experts are still split on this possibility. Some see the growing interest in cryptocurrencies from central banks as a sign of hope, while others warn against speculative bubbles that resembled those seen during previous cryptocurrency peaks. XRP, the original cryptocurrency, is far faster and more scalable than Bitcoin, although it is not as decentralized as Bitcoin. Ethereum, on the other hand, has higher fees and slower transaction speeds than XRP, but offers more functionality with its smart contract features. This functional comparison reveals that while XRP isn't as broad as other blockchain technologies, it may be better suited to the high-volume, high-speed needs of central banks. The public's perception and media coverage are important factors in the adoption of new technologies. Negative media coverage can have the opposite effect of what positive exposure can have, which is to improve investor confidence and widen adoption. Both sides have been seen with XRP. While some media sources highlight its potential as the next great thing in financial technology, others concentrate on its volatility and regulatory issues. The way that the public reacts to these stories will have a big impact on XRP's future. A number of elements will determine XRP's future, including the resolution of its legal disputes, developments in technology, and the state of the world economy. The best case scenario for XRP is that it spreads widely and gains value as central bank standards it. On the other hand, persistent regulatory obstacles and market fluctuations may impede expansion and diminish its prospective usefulness and worth. There are a lot of opportunities and problems associated with the tantalizing possibility that XRP will transform global finance. Though there are still major obstacles in the way, the possibility of every central bank adopting this digital currency offers a glimpse of a more connected and efficient financial future. The continued conversation between technologists, regulators, and financial experts will be crucial in determining whether or not the future of finance will in fact ripple across the XRP network as we continue to watch the progress of this digital asset.